Earlier this year, a company named Fantex made headlines by announcing that they were planning on selling stock in professional athletes, starting with NFL players Arian Foster and Vernon Davis. Well, immediately there were questions being asked about the process, the risks, and various ethical issues. For instance, John Elway sits on the board of Fantex Holding, while at the same time working as the executive vice president of football operations for the Denver Broncos. Is there a conflict of interest there? Is it even ethical to trade stocks on individuals? It also became obvious how risky such investments might be when the two athletes that were to be offered in the initial public offering both sustained serious injuries, causing the Arian Foster IPO to be suspended indefinitely due to season-ending back surgery. Well, Sports Money decided to investigate the details of this deal, and Michael Ozanian spoke with Michael Breit, a certified public accountant and certified fraud examiner who studied the Fantex prospectus and the proposed Arian Foster deal in order to get a better understanding of what this offering is really about for our Sports Money profile.
Michael, Fantex wants to go public, and they're pitching themselves as a company where you can invest in the future earnings of athletes. Your firm is one of the leading sports advisory and accounting firms in the country. You've looked through the numbers on this. How are they going to make this work?
This is very similar to securitization of assets. They're paying Arian Foster $10 million. Okay, the offering is also for $10 million. And the $10 million is 20% of Arian Foster's income as it relates to his lifetime of football, of both football and non-football related income activity. So if you're an investor, you have the right of that $10 million piece, which really you have to say to yourself, well, is Arian Foster going to deliver over $50 million of revenue from the time they got involved in the contract, which was after his $6.25 million signing bonus, through the lifetime of his career? So if you take a look at it as an investor, you say, is Arian going to make that $50 million? And in my view, it's going to be a tough hurdle to achieve, simply because Arian Foster signed a contract for $43 million that included a $12 million signing bonus. That signing bonus is not included in the revenues that inure to the benefit of Fantex. So now you have to make contract endorsements and player appearances, and the hook really is that Fantex is going to use their expertise to deliver various streams of income to Arian Foster that would inure to the benefit of the stockholder. If you believe that, then maybe there is something there. But again, you could only trade this, what they call a tracking stock, under what they call FBS, Fantage Brokerage Services. So it's a secondary market, not a primary market. It's not like buying a share of stock on NASDAQ or the stock exchange. So there'll be a very limited pool. There'll be a limited float. And the issue that concerns me is that, what about injuries? What about the continuing performance of Arian Foster? He's 27 years old. A football player's average life is usually 4 or 5 years. Well, that's indicative. How much longer is Arian going to be at a peak performer, and is he going to attain that income level for the rest of his career? Those are the unknowns. In my mind, this is a great, great theme of fantasy sports marrying Wall Street.
When you go through all the numbers, Michael, is there any sort of magical target of athletes that Fantex has to sign up for this in order for it to work?
I wouldn't say there's any magical, but I think if they want to have some more awareness of this tracking program, I think they have to get stars with a little bit more superstar rise out there, a little superstar potential. And not only that, I think they have to be noticeable in all sports, whether it be golf and tennis and baseball. And then all of a sudden people might say, this is really terrific because they have some appeal in every sport.
What do you think has sort of led to Fantex wanting to go public today? Is it the sort of the overall ebullience in the stock market in general? We're seeing that the market hit new highs every day, all the liquidity out there.
No, I think, again, think of the word Fantex, fan, fanatic, fantasy. When you think that through, I mean, they're really looking at that deep desire of that fan to own a piece of someone who they admire, they love, they look at every Sunday with great adulation. So I think that's what Fantex is all about. They're looking to really capture that great spirit of the sports fan, okay, and have that person invest in someone that they follow.